If you're running a landscaping or lawn care business, there's a tax that a lot of business owners in your position don't fully understand until they get a surprise bill from the IRS. It's called self-employment tax. And today I'm going to break it down in plain language, what it is, how it's calculated, and what you can do to reduce it, and why understanding it now could save you thousands of dollars this year. Let's get into it. My name is Tasha, and I'm an accountant and the founder of West Financial Services, LLC. We work with small business owners, landscapers, lawn care operators, contractors, and other service business owners to help them understand their taxes, keep their books in order, and build financial strategies that actually work for their businesses. This channel is where I share that education for free every week. So if you're new here, hit subscribe. So let's start with the basics. What is self-employment tax? When you work for an employer as a traditional employee, your paycheck has Social Security and Medicare taxes automatically withheld. The rate is 7.65%, and your employer secretly matches that same 7.65% on their end. So combined, the total going to the government is 15.3% of your wages. But as an employee, you only see the 7.65% coming out of your paycheck because your employer covers the other half. Here's what changes when you own your own business. The IRS considers you both the employer and the employee. That means you're responsible for both halves, all 15.3%. That's 12.4% for Social Security and 2.9% for Medicare. This is self-employment tax, and it's calculated on your net profit, meaning what your business earns after legitimate business expenses are subtracted. Let me put a real number on this so it hits home. Let's say your landscaping business earns $60,000 in gross revenue this year, and after your business expenses like fuel, equipment, insurance, subcontractors, and so on, your net profit is $45,000. Self-employment tax on $45,000 is approximately $6,885, and that's before your income tax. Your federal income tax is calculated on top of that. This is the part that catches a lot of solo operators and small landscaping businesses off guard. They see their revenue and think, I had a great year, but then they sit down with their accountant or open their tax software in February, and the number on the screen is twice what they expected. It's because they forgot about self-employment tax. So now you know it exists. Let's talk about what you can do about it. First, understand that there is a deduction for self-employment tax. The IRS allows you to deduct half of your self-employment tax from your gross income before calculating your income tax. So in our example, if you owe $6,885 in self-employment tax, you can deduct roughly $3,443 from your taxable income. Now, that's not a massive reduction, but every little bit helps, and it's an automatic deduction. So your accountant or your tax software is going to automatically apply the deduction. Now, second, maximize your tax deductions. The self-employment tax is calculated on your net profit. Every legitimate business deduction you claim reduces your net profit, which directly reduces your self-employment tax. So if you're not tracking every fuel purchase, every equipment repair, every tool, every work-related phone bill, every business mile, you're overpaying. Track everything that is ordinary and necessary for your business, and keep your receipts. Now, third, you need to know that your business structure matters. If you're operating as a sole proprietor or a single member LLC, all of your net profit is going to be subject to self-employment tax. But there is a structure available to small businesses at a certain income level that could significantly reduce the amount of profit that is exposed to those self-employment tax. It's called an S corporation. If your landscaping business is clearing somewhere around $30,000 to $40,000 or more in net profit, the S corp conversation is worth having. Okay, now let's talk about estimated quarterly payments, because this is the other thing that surprises new business owners. If you have a traditional job, taxes are withheld from every paycheck, and by the end of the year, you've usually paid most or all of what you owe. When you own a business, no one is automatically withholding your taxes. The IRS expects you to calculate and pay your taxes through the year on a quarterly schedule. Those deadlines are April 15th, June 16th, September 15th, and January 15th of the following year. Now, if you don't make those payments or you underpay significantly, you're going to owe a penalty when you file your return on top of whatever tax balance that you have. My rule of thumb is this: set aside 25 to 30% of every paycheck or payment you receive. Open a separate savings account. If you need to call it your tax account, do that. And then every time money hits your business checking account, transfer that 25 to 30% to your tax savings account. That money is already spoken for. It belongs to the IRS. And then when your quarterly deadlines come around, you're ready. When April comes around, you're not scrambling to find the money to pay your taxes. Self-employment tax is real. And the landscaping business owners who understand it early have a massive advantage over the ones who are learning it the hard way after their first tax bill. So now you're ahead of the game. If you want a deeper look at your specific tax situation, we offer consultations at West Financial Services. The link is in the description to schedule yours. This is Tasha with West Financial Services LLC. Follow us for more tax strategies and education for individuals and small businesses.